Morning, everybody. How are we all doing? Morning, Mark. Morning, Mumo. Morning, Danny, David, Paul, FTNet, Evil. How are you all doing? Happy Monday. Where are we going to start today? Morning, Peter. So today basically is obviously Monday. We're just going to go through the usual zones stuff, everything we normally do. And going to have a quick look at the position trade at EA version 2, and just quickly go through the update, what's changed, that sort of stuff. There is a video about it, but I just wanted to quickly run through the changes. I've had a couple of questions about some bits and pieces, so I'm just going to quickly whiz through it a little bit later on this morning. But the video kind of does explain everything, but there's a couple of questions I've been asked, so I'm just going to whiz through those as well. And we're going to have a look at the news, usual stuff. See what's going on with the indices this morning. Quite a bit of volume coming in this morning, but nothing particularly exciting from a directional basis. We've got some movement on the US dollar, which we need to have a look at. Big drop on the dollar again this morning. Well, not a big drop, but a drop on the dollar again this morning, which is really weird. I've really no idea what's going on with this dollar. This US dollar CAD is driving me nuts at the minute. It's absolutely stuck fast sideways. So anyway, we will go through all of that stuff. Morning, Sarah, Barry, Monkey, Dennis, morning. So I just put a post out this morning. I've just doubled an account. Oh, it's gone up. It was 104 a minute ago. It's 108 now. So yeah, just going to quickly go through the set file for this. We went through this in the members stream, but I thought I'd go through it anyway. Just to show you what the set file is doing. But yeah, nice. Not bad, is it? 4 weeks, double the account, 10 grand. I'll take that. 20 grand, actually. What's the account? Can't remember. There was a 20 grand account, wasn't it? Yeah. Yeah, so it was a 20k account. And it's now a 40k account. Yeah, 20. Okay. Anyway, we'll go through that in a bit. Morning, Chris. Right, so let's start with the news as usual. So this week we've got a very light news week. Today is that was yesterday rather, was the elections in Germany. Looking at the euro this morning, there's not a massive impact off of that. I thought there might be a little bit more movement. It seems to be fairly bullish this morning on the euro. So that German election didn't really shake the market up as much as I thought it was going to, but we'll see what happens today. So we've had the German elections coming out. Today is a yen bank holiday. Be prepared for some movement on the yen. Quite often the US manipulates the yen when the yen cannot fight back. We got German IFO business climate this afternoon, which doesn't tend to do a lot. Tomorrow's main news is the consumer confidence. That's really it for tomorrow. Aussie dollar CPI on Wednesday morning. That's forecast to come out ever so slightly up, bullish for the Aussie. And that's pretty much it. Then the US dollar unemployment claims on Thursday. It's just a rubbish week for news. We've got the G20 summit kicking off as well. And we've got the CPI for Germany, which might kick the euro a little bit, and CAD GDP. But yeah, it's just a dead week this week. So after last week, obviously we had all the PMI numbers coming out on Friday. We had loads of interest rate decisions, etc., etc. If you look at most markets last week, just didn't do anything, did it? Huge news week last week, and we just went sideways. So very, very flat trading conditions at the moment. We're not really getting anywhere with an awful lot of stuff. The Aussie and the New Zealand were the actual main, well, say main movers. They did move a lot last week, but just dead, isn't it? Flat, sideways. Morning, Callum. So yeah, rubbish. Yen is on the march, so that's the only thing that is really kicking off at the minute. Very, very strong yen. Interest rate rises in Japan for the first time in 2 decades, really driving the yen. So I'm getting the feeling that the carry trade, the old US dollar carry trade, is gone. So we'll see what happens when we get down to these lows, but we may hold that. But the way Trump's going at the moment, I doubt it. Anyway, so that's your news this week. Very, very, very light news week. So market will do what the market does based on volume this week. There's nothing particularly exciting that should really shake the market up a lot. Over weekend news, and not an awful lot. Obviously, the Ukraine thing is bubbling away. There could be some changes coming to obviously what happens with that war, which would be great. But apart from that, and the election in Germany, which didn't really do anything, not a lot. Yeah, so very, very quiet. The EU is now being very nice, and I want to lower barriers. So again, all the threats for trade tariffs that we've had for the last couple of weeks, gone. So, yeah, just total hot air from a complete lunatic. That's basically what we've got at the moment, isn't it? Main news this weekend, position trader EA V2 was launched. Now with all the new signals and everything. So if you haven't checked that out, go and watch the video. And I'll answer a couple of questions about the logic for the market reversal alert in a minute, because that's basically the main question I've had. It's not the same. Yeah. So what you see here on your chart will not necessarily be exactly the same as you see alerting in the indicator. Okay, so I'll go through why in a bit, and basically what that does now. So that's the only real question I've had. Right, so that's basically the news covered. This morning, there's a couple of ADRs and a couple of RSI extensions, not a lot. Euro-odd has hit ADR. Always careful with anything to do with the Australian dollar and the New Zealand dollar on a Monday morning, because we do often get gaps and we get very, very, very wide weekend spreads. So that's the lower that candle there for the Euro-odd. We have just tapped into ADR. So that is technically an ADR hit. How much of that is broker spread and slippage? Difficult to tell, but there is an ADR, but you've missed it. So if you did drop down, if you're using the EA and you took a reversal alert on that, you're already out. There's a reversal alert on that candle there. So hit ADR, reversed, no retest. So you got a very decent half ADR out of that from there, roughly. ADR, half an ADR is 46. You got 42. Technically 43. So yeah, nice half ADR reversal on that Euro-odd. Euro pound also is a hit. So that one you're still up at the highs at the minute. Reversal alert is there. It's not in yet. So there again, there's a little bit of a broker shenanigans there. You've got about a quarter of an ADR of broker movement there. Not sure whether this is a really good ADR hit, but nice M pattern, but no reversal because of the speed of that move. So your reversal alert is going to trigger literally in 4 seconds. We can watch it live. Look, ding, reversal alert. Okay, so there's your short signal on Euro pound. RSIs today. Euro CAD is a 4 hour. There's not a lot on the RSIs, as you can see. These RSIs are dead at the minute. Really, really, really dead. There's just so much sideways movement. There's not an awful lot of signals coming up on the hourly. The 4 hourly, we've had a few bits, but this is a nice divergence. Oh, it's not quite divergence, actually. No, it's not. Ignore that. It's not divergence. But you got a nice RSI extension to the upside there on the 4 hour. That's already played out. You've missed it. So you would have been taking probably a 15-minute reversal alert, which is literally just triggered. Again, it's a bit far away. Not quite a 3-bar reversal there, but pound CAD is also an extension to the upside. Good looking short on that one, coming out of propulsion. So nice propulsion gap retest there and a big sell going in, but it is very, very early on a Monday, so be careful. But market structure on this is a lower high. So potentially this could be a lower low coming to test the lows down here. So that looks like not a bad short. And obviously you got that double weekly low coming up down there to have a look at. Previous monthly in the middle, but looks quite good for a short. Failing that, you take a second entry at about 220 ADR. Probably take one there and then one up there. And you've got another backup at the top. So you'd be in no more than 4 positions if it didn't drop from here and it pushed up. You'd be no more than 4 positions there. Nice easy exit on that short. And the other RSI extension you've got is the US dollar Swiss. So that's extended to the downside again. So again, this US dollar, really, really do not know what is going on with this US at the minute. It's a very, very odd situation we've got with Trump. It's almost like somebody has taken him over and possessed him with an alien or something. Just talking absolute nonsense, making stupid decisions which are destroying the economy of the US. And really, nobody's doing anything about it. So we'll see what happens. But anyway, at the moment, I don't hold up too much hope for any US dollar strength unless he decides to change his mind on everything he's made his mind up on so far and actually boost the economy and make America great, which is what he won the election on. So we'll see. But this is a monthly low. We've got a double propulsion gap here as well. And then you've got another nice support. So not a bad looking long, but it's going to need something bullish for the US. And we're very, very short on news this week for the US. Consumer confidence doesn't really do an awful lot. So the only real news you've got is the unemployment claims on Thursday, which are forecast for no change. So, for no change. So, difficult to tell. GDP could move the market, I suppose, but very hard to get any indication as to what's going on with that this week. So there's your RSIs and ADRs. Nothing particularly exciting. Let me just open the VPS. Morning, Ace. Morning, Church. Morning, Jean-Roger. I don't have Euro Pound ADR yet. So ADRs, Monday's ADRs are always a little bit hit and miss because you get, obviously, on the overnight swaps, you always get some kind of obviously slippage going in and spread from your broker, but specifically on a Monday, depending on your broker, you'll end up in completely different places. So some brokers may end up opening there, some brokers will end up there, some brokers will open up there, but they'll spread it down to here. You know, it's all down to the broker, and because you've got 2 days worth of inactivity, and then as soon as the market opens in New Zealand, you get a large amount of orders coming in. And if those orders basically just are market orders, they'll get executed at whatever price. So the price will just jump to wherever it needs to be to execute the order. And that's where you get the spread and the slip. But yeah, Mondays are always a little bit difficult with ADRs, especially Aussie and New Zealand. They're the worst of the lot. They're the worst of the lot all the time, basically. But anyway. But even so, even if you say, right, that's not an ADR hit, it's still a very nice mean reversion opportunity, isn't it? Yes, big, strong push up there. Nice M pattern. Anyway. Morning, JC. Morning, Evil. Your weekly history is empty as well. It is. Why is that empty? Why is that empty? Am I on the latest version? 1.34. Yes. Okay, there's a bug there. Okay, I'll need to fix that. There's a bit of logic in the dashboard, basically. So if you look at this dashboard, whoops, is all filled because we've closed trades out this week. What that is there's a logic in here that says if there is no trades closed, do not show the week. I thought I'd applied it so that if it is the current week, that logic doesn't apply, but obviously I haven't. So I need to fix that. So that's all it is. If you close a trade out now, if you closed out a 0.01 on something, this will all populate because there's been a trade closed this week. It's because there's no trade closed this week. I need to fix that. Let me just quickly make a note of that. I'll do that this morning and put another update out. Bug fix. Weekly not showing if no trades closed. Yeah, I'll fix that. Maybe the famous MT4 update? No, it's not that. I haven't updated it. So this one's updated, I think. Yeah, this one's updated, 1440. This one isn't updated, I don't think. Oh, yes, it is. Yeah, no, it's updated. Yeah, so we're all updated now to 1440. There's no the update log was very sparse. Nothing in there. No information about what they've updated. It was a security thing. So I don't know. Maybe they found a backdoor or something. But anyway, morning, JC. Right. So we'll have a look at the zones this morning. So indices, clean break short on the DAX. Very nice clean break short on the DAX today. So pre-market, yeah, nice nice gap fill in play at the moment. So there's your 5-minute opening range. So the pre-market today was somewhere around about there. So pre-market range break, very nice. 5-minute ORB, equally very nice today. So nice break short on the DAX. FTSE, not gone anywhere yet. So there's your 5-minute range. So if you took a pre-market range break this morning, it's a long. And the 5-minute ORB is also a long. There we go. So you triggered long on that one. So we'll see where those go. Nice break on the DAX. Nice, clean, easy money today. Although I've made a loss already this morning. I already taken one on the FTSE today, and it's a loss. That'll be got back in a second anyway. So just better get all that loss back. Assuming that hits target. Should I shut it now? Let it run. Right. Okay, so we look at the zones. Actually, what should we do first? Should we look at the zones, or should we look at the EA and stuff? I might quickly just whiz through the EA change this morning, just before I go into do all the zones and everything and look at the other accounts. So I've been asked a couple of questions. So the new version of the position trader EA, you've now got this input here under entry signal settings. So we've now got 3 entry signals. Okay, you can take the 3-bar reversal, which is a push, pause, pull candlestick pattern, 3-bar pattern. You can take the traditional moving average entry, which is just the normal open above, close below, moving average for shorts, open below, close above for longs. Yeah, so you can still use that one. And then we've got the market reverse alert, and it just says use market reversal alert signal. So the indicator, there's a difference between the market reversal alert indicator and the EA version of the market reversal alert indicator. The logic is very much the same in the fact that when you get a new high made, the indicator and the EA both look for the last candle in the opposite direction to the move to draw in the break. Yep. So a market structure break is basically saying when we've got a new high and there are a load of buyers in the market, where was the last batch of sellers that tried to push the market short? Because we want them to take control of the market. Once they have control of the market, we assume that they are going to retain control and structure is going to shift back to the opposite direction. That's how it works. In the indicator, it uses a logic based on time and movement. Yeah. So if it's had a accumulation for a while, it will start to draw in rectangles to try and get you into a move. Yeah. So it's an accumulation. So what it does is it looks at how price is moving, the indicator, and after, if it's pushing nicely like this, it will just keep drawing rectangles and support rectangles until you get a reversal alert, and then it will carry on and it will monitor and it will wait and it will go and it will change direction, etc., etc. So it's got a sort of, not an artificial intelligence, but it's a little bit more clever in the fact that if we're not getting any pushes in any direction, it will then start to look at getting you into a trade. So I'm just trying to find something that's accumulated where there might be a couple of reverse alerts back to back. I'm not sure we've got anything. There's nothing that sideways. Oh yeah, there we go. Of course we have. Of course we have. I'm stuck in it. Right, so here you go. Prime example. We got a reversal alert short followed by a reversal alert long. Yeah, and look at the distance between the long signal and the short signal. The reason we've got two reversal alerts back to back here is because the thing's just not going anywhere. So what the indicator's trying to do is say, right, let's try and get into short here and get a breakout. Let's try and get long here and get a breakout. So it kind of turns into a breakout indicator, if you like. With the EA, the position trader EA, that is not the case. Okay, it works on the high and low of the day. The reason being is this is a signal indicator which is designed to work with a market condition, RSI extension, ADR extension. So what the EA does is it will only draw this in and only start to use a reversal alert signal if candle 2 is the low of the day. Or it's not actually that logic, but if it's a candle is making the high or the low of the day. Yeah. So if you think about what the indicator is designed to do, it's a reversal indicator. Yeah. So that is the high of the day. That is the reversal alert. That is the condition that the EA is using. So if RSI is extended above the level or below the level, we will then start to look for a reversal alert. If we are above the ADR level or below the ADR level, we will then start to look for a reversal alert. Okay, so the logic only kicks in if the condition is met. That's the main difference between the EA version of the market reversal alert indicator and the actual indicator itself. The indicator itself will just do more, but will give you a load of false signals. We don't need to see any signals by the reversal alert indicator in the EA because for a start it's trading on its own. It's not an indicator, it's an EA. And secondly, we're not interested if the market reversal alerts indicator is signaling 10 times a day down here. We're interested only when the condition is met, RSI and ADR. Okay, so that's basically how it works. So for those of you that asked me the difference, basically people have been back testing over the weekend, which is great. I only released it yesterday, so well done for getting in there fast. But they've been back testing and going, but I'm seeing reversal alerts on my indicator. The EA is not drawing them. That's why, because there's no condition met. There's no point in showing you the indicator if there is no condition, because we're not going to take any trades. So therefore, it's not signaling. It's not there. It's a signal indicator, not a condition indicator. Totally different thing. There you go. So there's a difference. Hopefully that explains that. Hopefully that was clear. If it wasn't, it's Monday morning. So if it's high of the day, then best not to use a reversal alert for low time frame usage. Why not? If you get a reversal alert, market's reversed. Absolutely use it. Basically, if you're using M5, right? So here you go. There's a reversal alert at the high of the day. The EA would have signaled that. The indicator signaled that. That is not a high of the day. There is no reversal alert indicator drawn there. There will not be one in the EA either. Yeah. If this pushes up here now on M5 and you get a reversal alert, it's a new high of the day and the market's reversing. Why not take it? That's what it's there for. The whole purpose of this is to show you when the reversals are happening. If there's one happening on a low time frame, take it. If you're on the M1 chart, right? Here's a great example of where you would not see it in the EA. Yeah. That is higher day. That is a reversal alert. You would see that one. Lower day is there. There's a reversal alert there. You would not see that in the EA because that is not the low of the day. That is the low of the day. If this pushes down now and makes a low of the day, there will be a reversal alert signal. But it filters, basically the EA filters all this chop out. Because you will not be taking a signal there because there is no condition met. The RSI is not met. The ADR is not met. Therefore, that thing is pointless because we're not going to use it. If I draw this on the chart every time there is an alert, what will happen is the EA will slow down to the speed of the market reversal alert indicator or market reversal alerts EA, and there's absolutely no point in doing it because you might as well use the market reversal alert EA. Yeah, that's the whole point of me. I'm trying to get rid of the market reversal alert EA because it is basically a snail and this is a Lamborghini. If you're going to backtest 10 years of data, do you want to do it on the back of a snail or in a Lamborghini? You'll be dead by the time you've done the testing with the market reversal alert EA. That's the whole point of trying to bring this into the position trader EA. But the logic is to do with drawing this indicator, and there's no point in drawing it if the condition is not met because you're not going to take a trade. But taking, you know, on any time frame, so there you go. This is perfect. Look. 5-minute time frame, reverse alert short, why? Higher day. Reverse alert long, why? Lower day. If it starts, now if this continues to do this for the next hour or so, it will start to draw in reversal alerts, the indicator. But the EA is not interested because we're flatline. You're not going to take any trades. You're sideways. Yeah, you can't take a reversal if it hasn't gone anywhere. It's a mean reversion indicator. Make sense? Hopefully. Just trust me, it works. That's basically it. So yeah, but you know, at the end of the day, it's you've now got 3 ways to get in. That's all I was trying to do with this release, was give people more choice. And also now for the people that are scalping, and I didn't realize how many people were scalping with the market reversal alert CA, using stop losses. You've now got the ability to use stop losses. Yeah, so take that off, and now you've got stops, which is fantastic for those people. Not for me, but it does open a lot more testing now. So, you know, with your back testing, you've got a lot more options now for back testing. So these taking single trades only with ADR strategy, that's going to be give you very, very different results in back testing, because some of the squeezes you will have got into potentially will not be got into if you get a 1 in 1 out within a couple of hours. The old version of the position trader EA may have taken multiple trades and got you into drawdown, which you sat in there for about a week. During that week, there might have been loads of really good trades you missed because you were in a trade already. So that is going to change your results completely, changing that input. Changing that input will obviously massively change your results, because if you're using stop losses, you're going to take a load of loss. But anyway, but that will change the results as well. So there's a lot of extra functionality in here, which potentially could make an awful lot more set files and a lot more strategies viable. But it needs testing time, basically. So, and especially the 3-bar reversal. Yeah, I mean, I've been going on about this forever. I mean, I've been trading 3-bar reversal strategies for a long time. That's partly where the market reversal alert indicator came from. You know, it's the 3-bar reversal is the start of the reversal. It's the very core of the. If you see any reversal alert on a chart like this one, is a perfect one. And this is what I mean. You're always going to find, but most of the time, when you see a reversal alert, before it, you will see a push, pause, pull. You will see a 3-bar reversal. So it's kind of like this is the super fast signal. This is the medium signal, or the confirmation signal. So it's a case of the aggressive entry or the conservative entry. Conservative always makes you less money. Aggressive makes you more money. But aggressive is more dangerous. Yeah, but you've got the choice now. You can pick. Right. So there we go. Covered that. Done. Let's have a quick look at what the index is doing. Okay, so that target's hit. Nice. FTSE's trying to break long, but not doing a very good job. Right. So quickly looking at the zones. I just want to quickly see what's going on with the trend pullback strategy. That's fine. H1 RSI mean reversion is still not doing anything. There you go. There's that bug again with the weekly. It's not showing any of the results because we've not closed anything out. I need to change that. So this basically, this strategy, which is what I was trading all of the end of last year, isn't working very well at the moment. because we're not getting any extensions on RSI, which are holding on the hourly time frame. So I'm going to adjust this again. I'm going to go back to what I was doing before I changed over to this variation of the strategy, which is going back to multi-time frame analysis. So I'm going to switch back to the hourly RSI, but I'm going to start using M5, M15 entry, because this thing's just not getting any entries at the minute. There's no exposure. And obviously without exposure, you can't make money. So I'm going to be changing that this week, probably today, this afternoon. I was going to do it at the weekend, but I didn't get time. Right, zone trader. So closed out 0.5% on Friday. Again, yeah, not showing any trades because nothing's been closed. So we'll look at the zones, go through each one, see where we're set up, see what's going on. So Aussie New Zealand was the only thing. Sorry, Aussie New Zealand and pound CAD was what was closed out on Friday. So that was those shorts there. Aussie New Zealand was closed out, and pound CAD, which was that one there in propulsion. So we got that little bounce out, but it did actually manage to break through in the end, although it's coming back down again today. So yeah, so that's what closed out on Friday. Nothing closed out so far this morning, but obviously it's early, so we haven't moved anywhere yet. There's nothing much on the table really to close out at the moment, so we'll see where we go today. So I'll whiz through all of the zones, have a look at each account, each pair, and see where we are. Did you remember that fixing that bug where the EA missed trades when trying to execute many trades at the same time? What EA? Yeah. That was the old lazy trader strategy, wasn't it? Yeah, I fixed that. Yeah. But that was a development anyway. That was development EA. So there's no bug in the position trader EA. It's not, the position trader EA doesn't have that problem. Right. Okay, so we'll start with Aussie dollar Swiss. No, we won't. We'll start with Aussie dollar CAD. So Aussie CAD, second short taken on Friday or Thursday. No, Friday. So we're in profit at the moment on that one. Well, actually, we're round about break even on that one. Oh, that's the other change as well. I forgot. That's not in the video, the other change, but now the position trader EA plots the average price as well. So there's an input. I forgot to cover that. Down here, you've got draw average price line, and you can decide whether you want what color you want for your buy and sell average. So that is now built into the position trader EA, just for ease of targeting. So you can see basically where your average is. That's only got one trade on, but that is obviously the average. So it just makes it easier for targeting, basically. Right, Aussie CAD. So I need a new short on Aussie CAD. Nice, easy. Oh, no, it's not because it's too close. So that's too close to get in. What I might do is just target that area there. So we're holding basically this high at the minute. This propulsion move to the downside is what they're reselling, and they just keep selling this level. So either this level is going to hold, and that's fine, we're off, and then I'm going to get out down here, or we're going to break through. If we break through, I'm going to look at the origin of this move here. Yep, so this is the next resistance area here. That's the origin of that sell here. So that's where my next entry short will go if we get up there. Otherwise, obviously, on the way down, just going to get out when we hit these lows. Aussie dollar Swiss, looking to try and get in long on this. So if this gets back down into these previous lows, that's where I'm looking for my long. So hopefully we can get down there today and I can get a long on that. That's going to be the new range. Aussie dollar, New Zealand dollar, looking for shorts on this because I'm already out. So yeah, zone's still in the same place. So up here basically is obviously where we're forming that range high. We've now broken down below that low. So there's an aggressive sort of entry on this one. which would be here. So this area here, where we suddenly broke down, which is through this area of previous resistance, which was the previous support, which turned into support again. We accumulated and broke down. This is where they are buying and selling from at the moment. So we are either going to hit that and pivot short, or we're going to form a low of the range here and come back up and retest these highs up here somewhere. So that's kind of an aggressive short entry. That's your conservative short entry. At the moment, because I've got a fair amount of exposure on, I'm going to go for the conservative one because I've already got a fair bit of Aussie New Zealand exposure on at the minute. Short on the Aussie, so I don't really want to add too much more short at the minute. So I'm going to go with the conservative. So I'm going to want it to push all the way back through that level up into the range highs. By the time it's up there, it'll be ready to pop back down again. Aussie dollar, US dollar, 2 shorts on at the moment. Next zone's already in place, which is up here, miles away. So actually, I can adjust that now. There we go. So I'm going to just take that high there. See if we can grab one out the top there. If we push back up again, so we're nicely pushing at the minute. If we can push back up into these highs again, I'll try another short out of there. And then obviously that will become the next zone further up. To the downside, obviously, this is an area of interest here. So if it pushes down, there's an opportunity to take profit here. I'll have a look at the P&L if and when we get down to that level and decide whether or not to shut this out. But at the moment, I'm looking for this area here to hold to the downside. So we broke, this is the Trump annoyance. This is where we were previously trading before that. We broke back above it and they carried on buying that level. So this is now the sellers flipping short at this point. So that's where I'm looking for my next exit down there. But we'll see. There's no news catalysts. I'm not expecting any big, strong, fast moves this week because there's no news to drive it. So it's going to have to be Trump saying something, and he's going to have to say something bloody positive to get it down here. Because the dollar at the moment is on its knees. So he's going to have to change his tune a little bit somewhere. Nick just missed it. So that was my next long, which I just missed, unfortunately, today. God, it doesn't get any closer than that, does it? That's spread. Look at that. The wick of that is actually inside the zone by 1 pip. The spread is over a pip. So the actual trigger for that is literally less than a pip. It's maths, basically. This is the difference between an EA and a human being. An EA looks at that and goes, no, you're 0.00001 out, and I'm not taking the trade. A human being would have just gone, buy. But it's an EA, not a human. So it didn't take the trade. So missed second entry on it, unfortunately. So I'll leave the zone where it is. Yeah, that's either now going to come back up into those highs. And we're going to test and run out the highs. We've got higher highs going in. So looking for that to become a lower high. Or we're going to come and continue down, in which case then I'll need a second position on. This is again Trump. So this area here and this area here are the kind of areas before that Trump news with the Canadian tariffs. So ignoring that, this is your previous area that they were buying from. So a second entry in there and then a third entry down there would be logical. And then obviously take profit on the pullback of that leg. Euro odd. First short gone in. So I need a second. I need a target as well. So target down at the lows. Just going to encompass that low as well, just in case. So, yeah, nice, easy second entry, isn't it? So we've got this area of buying, which they broke through, retested short. So that's where the sellers are sitting. So that's where my second entry short will be if I need it. Otherwise, just going to get out of the lows. Euro CAD didn't quite get to the sell zone on that, unfortunately. So we pushed up, didn't quite make it to the propulsion gap. So this area, this little high here, and the origin of the move, that propulsion there, which they then added to, that was my second short area, but we didn't get to it. So I'm in short 2. I'm just going to move target on this. I think I'm going to become a little bit more conservative and just go for a quick exit down there. Euro Swiss got longs on, so next long will be going in shortly, hopefully. It's been too wide. Haven't managed to get a trade on that. I'm just going to move this zone down a little bit because it's triggering. Yeah, there's nothing wrong with where it is. So a little bit too close to that zone, so it's just not quite getting the orders because it's closing above the area. So I'm just going to try that and just want to get another position on basically for this one. This euro is very, very weak at the moment, so we'll see what happens. But second entry is about to go in out of these lows down here, which we've already rejected. I'm not sure why we didn't get a trade on. When was that? Oh, that was Friday. These lines are in the wrong place. This is another bug I've got to fix. These weekly lines that are auto-drawn are not auto-drawn in the right place. So that is the midnight candle. No, it's not. That is. That's why it hasn't taken a trade. So yeah, so this will be the first entry today. So just about to take a second long on that one. Look for a push up. Euro pound, looking for shorts. Just missed me this morning. So we're reselling this propulsion gap here. Short. I wanted it to come up and test this area here, but it didn't get there. So we'll see what happens with that. Might get there today. Euro New Zealand have one short on at the moment. Need a second short. That will be up at those highs. Yeah, somewhere up at those highs. It's a bit of a tricky one, this one, because you've got these weird spikes off of the news. So that area there obviously is where we are selling from at the moment. So that propulsion gap has been added to for the second time. That is where my entry was. Obviously there's my entry because that was the rejection I was looking for at the propulsion. So I'm in short. If we need to, second entry will go in back up there. Downside target. It's not a lot of money, is it? Euro New Zealand. That's nothing at all. Not even really worth trading, is it? I'll go. Where do I want to go with this? I want a decent target. There's no obvious levels to target here. That's miles away. It's a mess, this one. Yeah, I mean, that is potentially where we're going to bounce. It's not going anywhere. This is the trouble at the minute. This is why it's so difficult to make money at the moment. When you're just doing this all the time, it looks really easy to make money in ranges. The trouble with ranges is there's no distance. So you have to, if you want to make really good money in a range, you've got to use a very high leverage, because if you don't get high lot sizing on, you're not going to make any money. So this has got normal lot sizing on, but by the time it gets down to there, it's worth virtually nothing, because it's going to take forever to get there, because it's just not going anywhere. An entire week's worth of movement is just tiny at the minute on this. So I'm going to leave the target down there and just see if it gets down there. It's money's money in it. Short on this one. Euro US dollar, next entry's up at those highs. We are holding this level at the minute. So I couldn't take another trade here. I got one on last week, but I couldn't take another one there because it's already that level. So target is still to the downside. So we've got lots of little areas down here potentially where they're going to start buying up. So I'm buying up at the most recent lows from the previous week. See if we can get down to there. Pound odd have one buy on at the moment. Target is the highs. We are holding this level so far this morning. Next entry is somewhere down in here. So if we break these lows here and basically come out of this range, I want to buy it again somewhere around about there. But yeah, it's not really going anywhere, as you can see. Totally sideways at the minute. Pound CAD shorts. Sorry, looking for longs on this. So I hate it when price does this. So 50% of the propulsion gap is filled. Quite often you will find these large propulsion gaps get 50% filled before they reject. In this case, we had news that drove through it, but it's quite often the case with bigger propulsion gaps. There's a lot of selling pressure in the lower half and you don't tend to get through it. So if the sellers are still wanting to hold short, they don't want it to get right back to the initial entry point at the origin of the move. So you end up getting halfway into it. If that is going to hold and we're going to make a new run on lows and undo some of this grind, this is the next area of interest here, but it's a little aggressive because it's this area here that we broke through with that propulsion move. So that's what a propulsion gap is. It's usually a break of a high and then add additional size. That's what makes market structure. So this is your higher low going in now, attempting a new higher high there. So that is a good spot if you want an aggressive entry to get in. So if they do get down and retest the low from Friday, which is the previous highs that they couldn't get through before the news spike, that's where you want to buy it. But it is an aggressive entry. So again, I've got quite a lot of size on. I don't want to get too aggressive. So I'm looking at somewhere around a 38 retracement on that 2-week leg for my entry, which is these previous lows, which is this previous high here, which is these previous lows. Yeah, so it's this area that they're buying from and selling from and buying from again. That's what I'm looking at. But equally, it could just hit that and go, and then we're going to fill that gap, and then we could even run at those highs. But depends what Trump does with Canada. Again, we don't know, do we? So I just realized I haven't covered the this account, the one that's doubled. I'll do that in a minute. Nobody's mentioned it yet. I put a post out this morning teasing people into the stream. No one's come, so you know. Pound CAD looking for longs. Pound Swiss got longs on at the moment. Couldn't get second entry this morning, so same thing. Just looking for these highs basically that we've rebought. So hit. Just tried to get through it, couldn't get through it. New spike, all the sellers basically flipped long, rebought. So that's where I want to rebuy. Target to the upside I've got sitting up here. So this move down basically. So this level here is what we broke. So I'm looking basically for sellers to come and stand in somewhere around there. If we get there. But it's very choppy, not going anywhere at the moment. Pound US dollar. So this is one of the main issues at the moment. Pound US dollar and US dollar CAD are the only two which are in any drawdown, which is worth looking at the minute. So this is one of those. Pound US dollar, we got fourth short on this now. So next one's going in up here. So this area here, which was resistance, we hit it. It turned into support temporarily during that area of balance, but the market couldn't push any higher. We ended up breaking back down again. So this is a price discovery failure. And then we used the same level to sell again. So that's where I'm looking to sell. We haven't got there. If we break this low, so again, we've got a market structure break to the upside. Yeah, hit the highs, broke it, retested. We are retesting now. So it's either going to be the springboard for a push up into that level, or it's not. If it's not, we're going to come down and retest those, and then we're going to break down further. So yeah, we'll see where this one goes today. But again, we've had decent news on the pound last week. The pound got a lot of good news last week, numbers wise. US obviously in all sorts of trouble at the moment. So yeah, there's a good chance I think this could push a little further, but it is so stop-starty at the minute. The whole market at the moment is like a stuttering engine. You get these massive moves that are undone, and then you get these big moves, but nothing actually goes anywhere. It literally is flipping around all over the place, but finding it very difficult to pick a direction. 2.5 weeks of nothing. Then we get one move out and sit around for a week doing nothing. It's what we're doing at the minute, and it's horrible because it was like this when we were in the interest rate. The start of the interest rate decline last year was the same, just sitting around for ages doing nothing. But you can't control the way the market moves. So hoping we either get a push up into there in the next couple of days, or we get confirmation that we're going back down short. And as soon as I break down below that average, I will probably start to scale out of some of this. But until it does something, I can't do anything with it. So literally all of last week managed to get one trade on. So we didn't do anything for the entire week and managed to get one extra additional trade on. So there's just nothing you can do with it. New Zealand dollar CAD, looking for longs. So looking, again, sideways, but looking for a push back down into these highs. So these highs here we broke and retested, which is that previous area of resistance we accumulated at. So looking to get up to there. There's nice levels coming up for additional entries here. So something like that, but need to get into it first. New Zealand Swiss have a short on. Sorry, a long on. Just that spread. New Zealand pair. So it's triggered the zone. It's tried to take the trade, but the spread was too wide, obviously, at that point, and it's above the gap. So I just need to re-add that. Not a lot I can do with that, really. That was going to be the second entry. I kind of want the second entry in the same place, so I'm going to leave the zone where it is. And just if it comes back down and retests that area with proper spread, I'll be able to get that trade on. But otherwise, off we go to the upside. Target to the upside on this one's already set. Oh, no, it's not. I haven't got a target. Let's just stick it up there for the minute. New Zealand dollar, US dollar have sells on. So exit is down in these lows. Again, 3 trades on this one. Not really going anywhere very much at the moment. Next entry short is up here. So if we do push up to there, looking for rejection out of those highs. US dollar CAD, this is the other issue that I've got, which is these 3 longs, which I've had on for an entire month now. Sideways. Just can't do anything with it. So I'm just looking to get out with a tiny profit here. There's a good chance I think this propulsion will get done. This one, however, is not really a propulsion gap. This is Trump announcing the tariffs, the gap up on the tariffs, and the, oh no, we're not going to do tariffs. So this gap here is actually caused by the undoing of that. So it's an A-shaped recovery move. So really, this isn't a load of sellers entering the market. This is just the final flurry of everybody getting out of that, or getting back in to the CAD, basically, when they had to jump ship. So this move down here is what broke those lows. So that is actually sellers. So that is an area I think there's a good chance we'll target. But unless something happens with this US, there is absolutely no reason for that to rally. However, there is no reason for that to rally either. That's what you get. When you get a bull against a bull or a bear against a bear, you get a range, because there's no advantage in either way, so no one's going to go anywhere. So there you go. US dollar Swiss, just waiting on that one. US dollar Swiss have longs on at the moment, so 3 longs on this. Fourth is going in down at these lows. which is that previous high. Again, there's a gap down on news, but this is the area they're buying from. So if we do manage to grind our way down to there, which is quite probable with the US at the minute, that will be my next entry long. And then I'm just going to try and get out on a pullback. But as you can see, since I got into this thing, which was back here, we had that rally down, was expecting some kind of higher high to go in. But it's actually turned into a symmetrical triangle break short. It didn't even actually turn into a symmetrical triangle break, but anyway, it broke short. We had that one pullback. I had an exit on that. Didn't take it because it didn't quite get to where I wanted it to, which at the time was that propulsion gap. And then obviously we had more negative news. So third position's gone in. Average has come down. Exit has been moved down, but it's just taking an entire week to grind itself back to nowhere. And then it's, it's news and Trump, so just waiting basically. So can't get another entry on this one for a while. So I'm either going to rely on it coming back up to retest that high at some point this week, or if it sits around, it sits around. If it pushes down, great. It means I can get another trade on. I can get my price moved. So once we get down into there, my average will drop down and I'll be able to get out on a pullback of that leg. But, we're just waiting for something to happen. This US is in a very odd place. It's not what I was expecting at all from the new Trump regime at all. I was expecting what we got last time, which was Trump opening his mouth and moving the market, and some kind of momentum building on the US. What we've had is confusion, lies, or I don't know if it's lies, it's just confusion of stupidity, whatever you want to call it. It's just not tradable price action. It's random. What the hell do we do? Markets are in turmoil. They have no idea what to do with the US dollar. Are you going to be in NATO or not? Are you going to side with Putin or not? Are you going to put tariffs on Canada or not? Are you going to do this or that? It's just nonsense. No direction at all. Flailing around saying things which are not happening. So how do you trade it? This is the beauty of position trading. I don't care what you do something. But while you're flipping around doing nothing, we can't do anything. So we're sitting here waiting for the guy to make his mind up as to whether or not the US dollar is going long or short. The Fed haven't got a clue what to do. Fed don't know what to do with interest rates, because that's greatly going to depend on how much income comes in. How much income's coming in? Don't know. Could be 25% more, could be 25% less. He hasn't decided. So, we're all just stuck between a rock and a hard place at the moment, which is just where we are. So sitting there waiting. Pound yen, I have a yen long on. So this is the only yen trade I've got on. We'll be taking a second entry on it if we do come down and retest these lows. Otherwise, we'll be looking for an exit up there. I'm brave at the moment. What's the drawdown on this? 37. So that's 37. I'm not going to be as brave as I think I am. I'm debraving. So yeah, pound yen. I don't want to get too brave. So nice rejection going in there at the moment. High or low. Push. This is a propulsion gap, obviously. So we've got sellers in here, we know. So if we do get back up into there, that's where we broke the lows. So this is this previous push, add, accumulation, symmetrical triangle break short, add to the shorts, add to the shorts. So the shorts there, I want to be out of my longs when we get there. There we go. So that's where we are at the minute. So hopefully I can get something banked today. I'll get that bug fixed on the dash. So Dublin account, as Mumo's just said, saw your Discord post on the new Dublin account. Looks interesting for prop with a 0.01 lots for like 50 to 100k account. So all this is doing, we covered this in the members stream last week. So this is the demo account. Actually, I covered this in the normal streams last week as well, didn't I? So this is the demo account I've got set up for testing the trade portfolio dashboard. So I needed this to be full of trades so that I could see that it was working. I could make sure that the drawdown systems were working, and I could make sure that everything was available for me to see. Yeah. So I decided to put the EA on, the position trader EA on, and just get it to start taking trades. So I basically said, right, get me in. If we get, I'll use a 5 RSI, yeah, really fast RSI. And if we get above 70, short it. If we get below 30, long it. And because we're trading the 1 minute time frame, if it moves 5% of its average daily range away from our trade, and we get a new signal, take it. Yeah. So position trade on the 1 minute chart intraday using a very weak signal and just price action. Basically use momentum in the direction of the weak signal for a mean reversion. Yeah. So that's all it's doing. Very, very, very simple. So the settings, for those that want to see it, it's using ADR and RSI. It's taking multiple trades a day on RSI and ADR. It's using 1% risk over 1 ADR. So if an individual trade, whichever it is, that's the first buy, moved an entire day's range against, that will be in 1% of drawdown. You've got spacing of 5%, right? So there's a possibility of taking 20 trades per day. Think about this. 20 trades at 1% risk over 1 ADR. If something hits ADR to the downside and you've scaled into it from the very first point at the high of the day, this will blow your account. Okay? Bear that in mind. This is not a sustainable long-term strategy. I said it last week and I'll say it again. Right? Put it in the back tester. So it's risking 1%, very high risk over an ADR. It is scaling in with a very small lot multiplication, so a 1, a 1.1, a 1.2, a 1.3, a 1.4. So we're not getting in super, super fast with sizing, obviously, because it wouldn't survive. The distance between trades is 5%. Could put that to 10, whatever. But the exit targets for a single trade are 0.25% and 1.5% on a multi. A quarter, you're not hitting those. Yeah, there's nothing gets into one trade. Very, very rarely you're going to get into one trade. It's always taking multis. So basically the upshot is it's targeting 1.5%. So I'm saying basically get me in if there's any kind of push in that direction and we get a bear move, and get me out if we get 1.5% profit in our account. And that is literally all it is doing. And it's using RSI 5 on the current time frame, which is the 1 minute. It's using the 70-30 level. The last close has to be above the RSI. So I'm saying basically the signal candle has to be above the RSI line. So the RSI has to push way beyond it for the bear move to come in, and the bear move still has to be above that level. Yeah, so it's got to be a strong push. Yeah, so we're not just flipping a coin. We are expecting it to have gone somewhere. So there's a good chance it is going to come back. And it's taking all signals. So I don't care if it finds a 3-bar reversal, if it finds a moving average crossover, or if it finds a reversal alert. Yeah, just take a signal short when you got some bearish price action. Take a signal long when you got some bullish price action. That's it. That's all it does. Yeah. Very simple. So that's what it's been doing. And it's been doing it very well, as you can see. So we've put in 25% already this morning. Put in 35% on Friday. 4% the day before that, 8% before the day before that, 6% before the so 79% in the last 5 days and 108 in the last 4 weeks. Job done. Now, obviously, this 25% today, this was in drawdown on Friday. So it just got left over the weekend. I turned the terminal on this morning. We've got some gaps and we've got some Asian movement. So basically this is because this is my demo account and this is my terminal. This is not a VPS, right? It's not running 24/7. It's running while I'm here. Yeah. So if I go to the gym for 3 or 4 hours and I shut my PC down, it's got the trades on and it will just carry on with those trades. When I turn my PC back on, price action may have moved an absolute mile and it will shut out something with 20% profit. I've no idea. It's totally random, but what it's doing is just taking trades. But it doesn't really do that. What happens is I open up my terminal here at about 7 a.m. each morning, and I close my terminal about 10 p.m. at night, 9 if I go to bed early. So it is really running from 7 to 9. So if you wanted to replicate kind of what I've been doing here, what you would do in the position trader EA is you would set the trading times to be, for me, it would be 09 and 23. So that'd be about right. So 09, which is 7 a.m. UK, and 23, which is 9 o'clock in the UK, roughly, something like that. That would be kind of replicating what I've been doing. So literally, it's running all day long. But what happens is, and where it makes these nice gains is, if we're in like -5 or -10% of drawdown when I shut the terminal down at 9 p.m., when I open the terminal up at 7 a.m. in the morning, Asia has moved the market. So if I was in 5% drawdown at night and Asia's moved the market, what's happened is it's actually taken it into 3.5% of profit. So instead of closing out at 1.5% profit, which is the target, it's actually made an extra 2% because Asia's moved it. By the time I turn my terminal on, it's gone, oh, I've got more than 1.5%. I'll shut it. But it could be 4%, could be 5%, could be anything. I've no idea. But you got, some trades in there like $226 CAD Swiss. So let's look at the CAD Swiss. There you go. So that's the CAD Swiss trades. So it took the CAD Swiss trades on Friday. So that's obviously today. So Friday it started to get in. It scaled in there. So we had 1, 2, 3, 4, 5, 6, 7 trades on Friday. When I went to bed, it was in drawdown. Yeah. This morning in Asia, it did this. Yeah. And that is when I turned my PC on this morning, which was about 7:45. So it went, yeah, I love that. That's what it's doing. Literally. But it just shows you, it's a really good explanation of what position trading is. This thing is not clever. Yeah. Look at the short it took before that. You can't because we'd have to go out into a higher time frame, but yeah. So look, yeah, it's a great example. Look. So it took a trade there on Thursday. I closed my terminal. It didn't take any more trades because it hadn't moved. I closed my terminal down. I reopened my terminal in the morning here. That was 7:49. At 7:49, it was more than 5% of ADR beyond the first entry. So it took a second one. And then it pushed down. It didn't get to 1.5% profit. So it sat around all day until here. And then it started taking a few more and it got out. Then it decided to flip long. But it's not doing anything clever. It's basically getting in and out of the market because the market moves up and down. So when the market moves up, it goes short. When the market moves down, it goes long. And it just waits for profit to be available. That is exactly what position trading is all about. This is incredibly high risk. But with high risk comes high reward. And that's basically what it's got. A very high reward. But if you've got a prop account and you want to double it, there you go. But I've no idea what drawdown it goes into. At the moment, it's sitting in 3.2% of drawdown. So I'm 99.9% sure it's gone over a 5% drawdown limit. I'm pretty sure it's gone over 10% as well. So if you want to run it on prop, I mean, that trade on its own is in 5% of drawdown. Look, Aussie, New Zealand. But I don't care. I can shut that out completely now and just take 20% on the day. Oh, dear. Doesn't matter, does it? But that's basically all it's doing. So as I said to the guys in the members stream last week, you can't backtest this on MT4 in any viable way because all it's going to do is blow the account. You'll never run this set file and it won't blow the account. It will always blow the account. Yeah. I mean, I haven't tested it, but I'm pretty sure it will blow the account at some point. So, but if you go and put this in MT5, if you get the MT5 version of the Position Trader EA and you run it on specific pairs, so this is running Aussie CAD, Aussie New Zealand, CAD Swiss, CAD Swiss yen, Euro Pound, Euro US, Pound Odd, Pound US, New Zealand yen, and US yen. So it's running 3 yens, 3 US, 3 pound, 2 euro, 2 New Zealand, 2 Aussie, and 3 CAD. No, 2 CAD. 3 Aussie, 2 CAD, yeah. So that's basically what it's running. So its max exposure really at any point is no more than 3 on an individual instrument. So it's nicely balanced in the fact that it's not going to go 7 long on the US dollar before US news. It's not going to do that. But equally, it's still exposed a lot to, you know, we've got 45 lots short on the New Zealand dollar, 56 lots long on the Aussie. If one of those pops today, it's in trouble. But most of that is to do with the Aussie New Zealand, obviously, which is probably going to go sideways anyway. But yeah, so that's basically what it's doing. But you can put this into the MT5 in the Position Trader EA in the Strategy Tester in MT5, and you could select to trade all of those currencies, and it will do a back test simultaneously on all currencies for you. But at some point, it will probably blow. So. But you'd have to reduce the lot size down. You know, if you wanted to use it on prop, you couldn't use 1% risk. You'd be using 0.1. But then again, you're not going to double the account, are you? But you know, do some testing. Have a play around with it if you want to. But that's the set file. That's the settings. I'll just show them on the screen again. But it's very straightforward. It's literally saying, if price moves up on the 1 minute chart, get ready to short it when you get a bear signal. And the bear signal is either going to be a strong 3-bar reversal, a market reversal alert, or failing that, we'll take a moving average cross. But the moving average cross, as you can see, is set to a 3 MA. So what we're saying is use 5 minutes worth of relative strength and use 3 minutes worth of bearish price action. So measure 3 candles. If you get something happening in 3 candles, as you can see, you're going to hit, it's very rare you will ever get 3 candles. I don't think it's actually even possible to have 3 candles in a row where you won't get a signal. That's the whole point of that. It can't not take signals. Yeah. So, but if you do, I mean, it's probably better if you want a proper version of this, don't use a moving average entry signal. Use either a market reversal alert or a 3-bar reversal. You'll get a lot less entries, but the entries will be proper. What the MA, the reason I set this up to use a 3 MA is because I just wanted trades. So yeah, every time price basically moves in a direction, it's going to cross a moving average because it's a 3 period. So it's like almost like using a 1 period, which is basically tell me if it's a bullish or a bearish candle, isn't it? But yeah, so that's, I think that is the 3. Oh, that's a 2. Look, there you go. So there's a 3. So there you go. So there's a good example. So you've got, after that signal long there, you've got 1, 2, 3 candles, and the very 4th candle signaled short. If it didn't, the 5th candle did. So you're going to find it hard to have more than 3 or 4 minutes before a new trade is taken. So it's literally perma trading. But all it's doing is riding the market, because that's all the market does, isn't it? But if it goes parabolic, be interesting to look at them all, actually, see if there have been any parabolic moves. I'd need to go out and let me open up another chart, because we need to be on a higher time frame really to actually be, to be able to see. Which one did I just open? It's that one. Let me just take the position trader off of that, because otherwise it's going to double trade. So yeah, so looking at so there's the Aussie CAD. Let's look at it on the 15. So you can see all the trades it's been taking. Just plot break even. No, not plot break even. Show previous trades. There you go. So that plots all the trades on the chart. So some shorts, longs, shorts. Aussie Swiss hasn't traded. Aussie yen, Aussie New Zealand. So look how many buys that thing's gone on the Aussie New Zealand. Yeah. But if I shut this is the difference, right? If I close this down now, yeah, and don't open this till tomorrow, if today's price action does this and it's 1.5 AD up there tomorrow, it's going to close out about 15, 20, 30, 40. I don't know what percentage it would close out, but it would close out an absolute bucket load of cash, wouldn't it? If it does that by tomorrow, I'll open up the account tomorrow and it'll be blown because it'll be margin called. It's not real. Yeah, it's demo, but it's a good example. So anyway, Aussie New Zealand, yes, we got a hell of a lot of risk on here. We got 40, 50 lots long on. So let's hope this pushes long today. Aussie US, CAD Swiss, there we go. So there's some CAD Swiss ones. So all the time the market is going sideways, it's just going to bank money. Yeah, so we've got another short on there, out. There's all the longs, out. We're now short again. So we'll scale into more shorts. Swiss yen, we've got a couple of buys on. It's not really taking many trades on that. Euro pound. There we go. So there's all the shorts. There's some longs. Some shorts. More shorts. More shorts. Some longs. We've got some sells on at the moment. So there was 2 that were taken last week. We got another one on today. So that's now back in break even. Euro pound, I'd guess. Yeah, so that's in 0.5% profit now. What other exposure we got on? Euro US dollar. There you go. So there's some nice big drawdown there. Some longs out. So we're currently in buys at the moment. So a little push up into that propulsion gap. That will get out of that lot. Pound odd. Mostly longs on that. Some shorts. But yeah, you get the picture anyway. Go and do some testing. Have a play. But it is a bit of fun, yeah? So it's the reason we covered this in the members stream last week is to try and find a compounding strategy. So when you're compounding accounts and you want to grow an account very, very fast, this is the type of strategy you use. It's gambling, basically, at the end of the day. You can't sustainably compound an account. I don't care who says you can. No one's come forward with any scientific proof or any confirmation they can continuously do it. It's just not doable. But you can compound an account very quickly by using high risk. If the market conditions match the strategy, it will compound the account within weeks, as I've just proven. Yeah, I'm not doing anything complex. I'm getting in, I'm getting out. It's very easy to do it, but it's not something that you can sustain for long term because it's too high risk. But if you need to get 5 grand turned into 15 grand to start your trading career, this will do it. Or it will blow the account. But that's gambling, isn't it? Yeah, you don't walk into a casino expecting to come out up. You walk into a casino expecting to come out down. You have hopes that you'll come out up, but that's very rarely what happens, is it? Yeah, you walk into a casino 10 times, you might come out up once, but there's a house edge, and the house edge always wins. Our edge in trading is position trading, but using low risk, which means that we can allow the market to move. That's our edge. Our edge is not that we get it right. Our edge is that we let the market move to prove us right. Yeah. At some point, it will always prove us right. People try to get the entry right, which is why they lose. If you stop worrying about getting the entry right and just wait for the market to exit you at the right time, you will win all the time. That's basically what position trading is all about. So, but if you up the risk 100 times more than it would be, you're going to make 100 times more money. Simple. But yeah, don't do it. Don't try and turn it into a career. There you go. Nice longs there. Nice shorts there. But obviously you don't need to use these targets. Again, if you want to do some back testing with different targets, go for 0.25%. But, just try and scalp 0.25% out of the market all the time. It's very easy. Because as long as the market's going to move up and down all day long, which is what it does most of the time, if you're looking for 0.25 of an ADR of movement, there's very few days that the market doesn't move a quarter of an ADR up or down. Yeah. So if you scale into a move and say, just get me out when we move a quarter of an ADR, and again, it's all doable in the EA. Yep. So use this target, exit target, set to 0.25. So we're saying if market moves up 0.25%, get us out. Yeah. Obviously above our average, but there we go. So that's my doubling account strategy. And we'll see. I'm going to let this run just for fun. But I do every now and again. And the other caveat with this is, yeah, some of this stuff is me closing out. Yeah. So I'm looking at this euro pound and going, yeah, I'll have that. And, I'll have that pound US dollar a 0.25% as well. So there is an element of me manually closing trades out, because the whole point of this account was so that I could test the buttons on the EA and, make those drawdown control decisions as and when I need to. So, God, there's a lot of positions on that, isn't there? Could literally close these out all day long and they keep coming. Look, keep closing them, keep closing them. There's a lot of trades on that. But there you go. There's the risk on. So I'm on 22% now for the day. I've got no drawdown. I can bank out all this. This is the beauty of this dash, isn't it? It's great. WDS, I'm confused by the spacing. Are you saying on a big range day it will take up to 20 entries? Could do within one ADR. It's basically half a percent. 5% is the spacing. So if that's one ADR, I'm saying if I was going to take trades 10% an ADR apart, and I take first entry there, second, third, fourth, fifth, sixth, seventh, eighth, ninth. Yeah, so that'd be 10 trades roughly, wouldn't it, in an ADR? If I use 0.5% spacing, I could, in effect, get 20. In the real world, that's not going to happen, because if price pushes like that and it doesn't put a bear candle in or any kind of bearish price action for a quarter of an ADR, you'll have one trade there and one trade there. It can push a quarter of an ADR and only take 2 trades. Because we don't get in. This is not grid trading, is it? We're using price action strength to determine entry. So we're not getting in a quarter of an ADR apart. We're getting in when there's price action in our direction. A minimum spacing of a quarter of an ADR. So if the market did this, the only way you would get 20 trades on in a day is if the market from here to here, that's ADR high and the start, and you would have to take your first entry at ADR low. Again, that's not going to happen because our first entry is after a push. So you're always going to be on your way to ADR before you take your first trade. So it's you're not going to get 20 trades on, basically. Very, very difficult. But if price moved like this on its way to ADR, yeah, in theory, you would have a trade almost exactly at 0.5%. But that's not how price goes. Price doesn't do that, does it? That's not the way price moves. Look at the spacing here. Got one there, one there, one there, one there. Look at the size of the spacing between that and that. Totally different. And then that and that. Totally different. And then that and that. Totally different. Yeah. Because there was no bearish price action. Right, so this is buys looking at, yeah? There's no bullish price action here. That's the first 3-bar reversal, bull price action and moving average cross you had. So if you took one trade here, that would be your second entry, because there is absolutely no reason to buy it. There's no bullish price action. We only buy or sell on price action. Reversal alert, MA cross, 3-bar reversal. Afternoon noob, morning even. For prop has to be super low size for a large account to ride the intraday squeezes. Yeah, it would. But go test it. Stick it on a prop, go and buy a prop evaluation and just stick it on there. What's the worst going to happen? It's either going to do that or it's not. I'm pretty sure it won't. But anyway, it's more likely to blow the account, isn't it? Because you're going to hit 5%. This is why prop is, so restrictive, because you're always going to be hitting their limits, because their limits are set within parameters. It's like prop basically got the advantage like the house edge in casino. Yeah, you go and play roulette, there's a zero. That's the house edge. At some point, multiple times today, zero will come up and nobody will win. We can pay out all day long to everybody at the table using all the money that everyone else has lost and make absolutely no loss at all. When the zero comes in, we get the lot. Yeah, that's what prop does. Prop goes, I've got loads of evaluations coming in. That guy's made some money. We'll give him some of the evaluation. That guy's made some money. We'll give him some of these other guys' evaluations that have all blown their accounts. And then every now and again, the market will spike, go over 5% drawdown, and everybody will lose. We take the lot. Rinse, repeat. That's prop firms. It's a house edge. You cannot win long term. Same as binary options. It's 50-50 shot. It's not a 50-50 shot, because they pay out less on your winnings than on your losers. Therefore, they have an edge. Always a house edge. Prop have got it sewn up. They know that there is not a strategy in existence that does not draw down by 5%. They set the target at 5% because they know that there is no strategy out there that will not fail. Banks and institutions draw down by more than 5%. They make more money than God. Yeah? They make more money than Warren Buffett. Warren Buffett draws down by more than 5%. Do you think he plays prop? No, because he's not that stupid. If there was an edge for us in prop, Warren Buffett would be running prop firms. No, he wouldn't actually. He'd be playing prop firms, sorry. But he doesn't. Funny. At the moment, it's on demo. Will you ever trade it? No, never trade something like this live. No. Not me. You could do. I mean, yeah. I mean, you know what? If you had, I don't know, let's say, for example, you had a budget of £5,000 for prop this year. This is what I would consider, because I could get this to work. I've just made this work. I've just made 21,000 out of a 20 grand account. Yeah. How much have you spent on prop in the last 2 years? How much have you made out of prop in the last 2 years? If you'd have put 20 grand into this account 4 weeks ago, you'd be sitting on 21,000. You know, I don't know, but no, it's not for me. But you could run it with smaller risk, see how you get on. But it's not what I would do. Warren Buffett watches Top Step TV. I bet he does. Reduce the risk to 0.2%. Try it. Let me just save this. I think I've got this saved as yeah, it's that one. I'll run it on control points because there's not a lot of difference, really. And yeah, reduce the risk. So if we're going to reduce the risk down to something like, let's go in 0.2, we'd need to reduce our targeting down to, oh God, could you even do that? I got to reduce that by 5. So it'd be 0.05. That would be reduced by 1.5 divided by 5, 0.3. So that would be the new targeting for individuals and multiples. I'm just doing this on pound US dollar, obviously. It's a portfolio approach. So you wouldn't do it on a single currency because I don't think it'd work, but you never know. There's no lot multiplication. Georges, the problem with doing that is you're not going to get lot multiplication. Mind you, it's not the end of the world, but that's turning it a little bit more grid tradey, isn't it? But yeah, you can't lot multiply in 0.02s. You'd need to start with a little bit more risk than that. There you go. Look, it's up 5% already. How long has it been running? 25th of January to the 5th of February. So 10 days, about 2 weeks, up 5% in 2 weeks. But I don't know what the drawdown is. I mean, look how many trades you got on short. If that thing pops now, you're in trouble, aren't you? It is popping. Can't take any more trades. There's a maximum limit to the number of trades that can be taken in the position trader EA, which is a requirement of passing MQL5 marketplace restrictions. So I think it's 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, 20 trades max. So what you would have to do is, in your drawdown control settings, you would need to set that to true. And when you get to 20 trades, would it need to be 19? I think you can use 20, yeah. So you'd need to set that to 20 so that when it got to 20 trades, when did it take that first one? Oh, it's just right again. It would then start to do DD control because you're going to, if you want to scale in, you're going to need to scale out, which is going to hurt the results, obviously. But let's just take it off a visual. Just see the equity curve. Just see what, let's see what impact that has on the equity curve. Using DD control at 20. Also, obviously, the other thing we tested in the members group as well is using an overall loss limit of 5% or 10%. So looking at how many times this strategy hits a 10% drawdown or a 5% drawdown and then doing a full closure. There you go. Look, hemorrhage, squeeze. You're trading the 1 minute chart. What you're effectively doing, trading the 1 minute chart with a position, is saying, I want to be in at the very, very minute that 6 week squeeze starts. I want you in. I want you to get me into the worst possible point in the squeeze. Trading 1 minute charts because you're trading the algorithmic chop, so you're in constantly. So it makes sense that when there's a squeeze, you will be in it the wrong way, guaranteed, right at the very start. This is why 1 minute charts are pointless for position trading, long term. But yeah, look, it doesn't make money. But, you know, again, prop is not about long-term edges. Prop is about matching your strategy to market conditions during the evaluation. That's what prop is for. If you have a mean reversion strategy that works within an ADR range, and when you start your evaluation for the next 5 days, the market stays within a 1 ADR range, which it does 80% of the time, your strategy will work. But when it breaks out into a trend, you will blow the account or blow the evaluation. It's not about making money long term, because you can't, because there isn't a strategy that stays within a 5% drawdown. Yeah. And if it does, it's just not using enough money to make it worth trading. But, you know, there it's absolutely fine. Pass evaluation. Maybe pass a stage, pass evaluation. Pass phase 1, pass phase 2, pay. How long are we going to last before we get our next pay? Can we get our next pay? I'm just drawing lines at random. I have no idea how much time is passing or percentage, but you know, we're starting here at 91, so 94, so that is 5%. That is 5% ish, not quite actually. That's about 5% where we are now. not quite right, my lines, but you get the point, yeah? Drawdown, but that was only about 3 or 4%. Don't forget, this is only one currency, yeah? We're just doing the pound US dollar here, yeah? That there is an evaluation pass times 28. If everything that week went sideways, you can multiply that profit by 28. You got 28 forex pairs. You get the right day with this and it will kill it, as I've already proven. Absolutely kill it, wouldn't it? But yeah, I mean, look at it. It's lovely. If you started there, it's horrible. If you started there, it's beautiful. But that and that have nothing to do with the strategy. This has to do with what the condition of the market is when we started. At that point, it went into a squeeze. At that point, it went into a range, and it's been in a range ever since. Now, it's gone into a squeeze again. But that's where you want to flip over to your trend trading strategy. Unfortunately, because you couldn't see the future, you didn't. Anyway, it makes money when it wants to. When it doesn't, it doesn't. Simple as that. That's what trading is. All trading is the same, isn't it? But yeah, go and have a play, and yeah, see how you get on. Look, I'm at 1.35%. It's great, isn't it? I'm gonna drop 1k in today and make 100k. You can try. If you make it, let me know, and I'll expect some. I'll take a 10% commission from your 100k for the stream. First time checking the channel out after doing ad for Position Trader. Cool. Go and watch the Bootcamp poll on the website. I haven't right. Don't get right. Rewind, Paul. This is a joke. This isn't real trading. This is real trading. This achieve result. This is trading on account, taking trades as if it was live. It's a demo account. It's produced 104% profit. I've done 22% profit today. Yeah, but it's using a strategy that will probably blow the account within the next week. I'm going to carry on letting this run just out of curiosity to see what I can get this to before that big red minus 100 comes. Yeah. But the set file I've shown, I'll show it again. These are the settings. You can screenshot this and enter this into your EA. This is not my strategy. This is just something I've been using to test the dashboard. But proper account is here. This is the one you can copy trade if you want to. That's what this is producing. Unfortunately, my dashboard's broken. I've got to fix this in a minute. But it's done. Let me just close something out quickly so I can get the dash working. Euro odd. I'm going to have to reset that. Let's close something out that's got some profit. Not a lot there, is there, at the moment? Let's get out of this Euro odd. There you go. So there you go. So that confirms that problem with the dash. It's because it hasn't taken a trade. So yeah, up 7% in the last 4 weeks. But that's proper. That's a proper account. Morning. I'll rewatch and have to test the position trader V2. Are there set files available? No, there's nothing changed, Lucas. Well, there is change. There's changes to the set file. There's changes to the functionality, but there's no set files. I literally launched this yesterday. So I've just added new functionality in. Go test. Make your own set files up. It does the same thing at position trades. I'm not going to give anybody any set files because there's a billion combinations of set files that work. Pick whatever you want. But yeah, there's others. There's plenty of others coming out, I would imagine, as people start to test things. But you know, it's very, very similar to what we've already got. Morning, Plowman. Do I offer copy trading? Not officially, no, but there is a copy trader if you want to go on to CopyFX, which is you need an account with RoboForex, basically. So these are my two copy trade accounts that I set up, but they're in early stages, so don't worry about it for the minute. I've got 5 investors already. 7. Ooh, hello. But these two accounts here are the ones that I run in the live room. So it's this account on my VPS when my VPS loads. So it's this account here, which is trading zone, position trading zone trades. And this account, which is the H1 RSI mean reversion with the position trader EA. This is the one I'm going to change today so that it's now, this is basically, a long story short, I switched from multi-time frame strategy to single time frame strategy. Since I changed to single time frame strategy, which was working very, very well, the market regime has changed because Trump's changed the way this market is moving now. We're way more sideways than we were before. So we're not getting the RSI extremes on the hourly time frame anymore. So I'm going to switch it back to multi-time frame and start trading M5 or M15 entry signals on H1 RSI extensions. So it'll be a variation of what the strategy always used to be. And that is the one that's taught in the bootcamp. So if you go and watch the bootcamp, watch all the bootcamp. Yeah. Don't just skip to day 5 because it's the fun bit. Watch the whole lot, because if you skip to day 5 and look at the strategies, you won't understand why the strategies are being executed the way they are. You'll look at the strategies and go, this guy's an idiot. Why would you do that? Because you've understood what's in these, and now you know why you need to trade the way that that trades because of this. If you skip here, you'll go, or some kind of noise like that. But the strategies are all explained in there. Actually, on the best way to, if you just want to know what the strategies are, if you go to the position trader EA, I've done 2 new videos last month, which explain them very, 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 very simply. Yeah, this is the multi-time frame version. This is the one that I'm going to start to re-roll out now. And then ADR reversals. So these two videos on the position trader EA page explain the main 2 strategies. But that is all taught in the bootcamp. But the bootcamp is very old now. So things have kind of changed a little bit. Also would likely just try with the smaller funds and withdraw promptly. Yeah, you can do that. But if you're going to compound, compounding is all about taking the money. Yeah, same as prop. It's all about taking the money. So if you get an account that you compound like this, take the money, for God's sake. Every day, take it. Yeah, made 3.5 grand. Take the bloody money, because it's going to vanish at some point. You know, it's just what happens, isn't it? So market goes up and down. And does it draw the 3 bar on the chart? What, the EA? No. Think about what you've just asked there. Does it draw the 3 bars on the chart? Yes. That's the first one. That's the second one. That's the third one. That's a 3 bar reversal. There. But the EA doesn't draw that because it's there. It's a candlestick pattern. I think what you're asking is, does it draw a little arrow over the top and say, this is a 3 bar reversal? No, it doesn't do that. It draws an entry. So it works the same way. Well, no, I don't want to help. Go away, Bing. So yeah, if all the EA does on an entry is it does this. Look, this hasn't changed. So that's an RSI entry short. Why is it an RSI entry short? In this case, it's because it's a moving average cross. If that was a 3 bar reversal, it would still say it's an RSI short. The reason we're getting in is because of the condition, not the signal. We are getting in because of the signal. In the if you want to know why the EA got in, if you go to the the experts tab here, Euro pounds just hit target. There you go. You can't see it, can you? It's going to be too small. But in the experts tab, it tells you. So I've got log in here. It says EA log, RSI low trigger equals true. And then it says here MA signal triggered. It will say 3-bar reversal signal triggered or market reversal alert signal triggered. So although it doesn't draw on the chart, it tells you in the log the reason for the entry, whether it was one or the other. But all I would say is if all three are met at the same time, it will only use one. And the first one it gets to in the code is the moving average, because that was the original one. So if you had it set to 3-bar reversal, market reversal alert, and moving average cross, and all three conditions triggered at the same time, like there's a moving average cross, that's not a 3-bar reversal, and that's not a reversal alert. So that is definitely just a moving average cross. But if at that time all three were triggered, it would only say down here moving average, because what it does is it goes, has this been achieved? If no, has this been achieved? If no, has this been achieved? If no, we don't take a trade. If that's been achieved, it passes and does not execute this code. So it will only tell you there's a moving average cross, which there is. But there could have also been a reversal alert, and there could have also been a 3-bar reversal. But you'll never know. But you can see on the chart, obviously, because candlestick patterns are drawn, obviously, on your chart. So there's a 3-bar reverse. That's debatable 3-bar reversal. I'm not sure if the wick there is big enough, but the wick there is definitely big enough, and that bear candle closed below that candle, so that is a push, pause, pull. So there's a 3-bar reversal. That one is not. There's a 3-bar reversal, pull, pause, push. Yeah. So, you know, it doesn't go like that and draw it for you. You don't need to know. Yeah. You just have to trust the logic, basically. I'll have a full refresh of what you've been doing. Cool. Elevated Trading Hub, morning, noob. What has fundamentally changed since the bootcamp was created? Or is everything still current? So the main things that changed since bootcamp was created. First of all, I'm using the position trader EA, not the market reversal alerts EA. I mean, there's not really a lot that's changed, to be honest. More the for me personally, it's the strictness of the conditions are a lot less. So I used to have certain things in place. Over the many years, I've just become looser and looser and looser with the way that I get in, which is why I dropped the market reversal alert indicator as my primary signal source, because, you know, there's moving averages and price action patterns like that. There's a great example on the CAD Swiss there. Look, it's absolutely brilliant. Yeah, so this used to be my 100% focus, the market reversal alert, because it's a confirmation of price action strength. That is also a confirmation of price action strength. That is also a confirmation of price action strength. So what the main difference was between what I have been doing over the last sort of year and a half or so is being less reliant on signals and more reliant on conditions. Because yes, I want the RSI extended or an ADR extension before I even consider getting into a trade. But the reason for me getting into the trade has become less important, because when the reversal happens, you've had a moving average cross. Before that, you've usually had a 3-bar reversal. But what I found was whether I waited for the market reversal or whether I took a moving average cross in the long term makes very, very little difference. So that's the main thing that's changed. My exposure rules have changed in the fact that I'm less reliant, less concerned about the 2 trade rule. So in the bootcamp, we have a 2 exposure limit, 2 rules, 2 currency exposure rule, where if you go long Aussie CAD and you go long New Zealand CAD, for example, you have double CAD exposure long. Therefore, you will not take any more CAD exposure. That's it. You are fully exposed on the Canadian dollar. You should not do any more. But what I've realized over the years is by doing that, what you're doing is you're removing the ability to make money on all of the other CAD crosses, which may well be moving beautifully, but you're not taking all of this profit because you've got 2 CADs on. So by dropping your risk down and taking more exposure across more currency pairs, what you're actually doing is you're not risking more. You are exposing yourself more to an individual currency, but your risk is lower. Therefore, your exposure is lower. So, but your opportunity is greater because you've got 2 things at play with every currency pair. First thing is obviously you've got the cross here of the CAD and the Swiss. So if I've got 4 longs on the CAD, for example, and I get a beautiful signal to go long CAD Swiss, and I don't take it, and then all of a sudden the Swiss franc collapses, the CAD Swiss will fly. These other 4 CADs won't move because the reason the CAD Swiss is flying is nothing to do with the Canadian dollar. It's the Swiss franc dying, which is driving the CAD Swiss up. It's the weakness in the Swiss which makes this move. So by overexposing myself to the Canadian by taking a CAD Swiss as well, what I'm actually doing is creating an opportunity on the Swiss franc, not overexposing myself to the CAD. Equally, if the CAD drops, yes, I am going to go into drawdown on 5, not 4 pairs. It's going to hurt a little bit more. But by reducing the risk down, you're going to get a more consistent P&L because you're going to have more opportunities to bank more often, which again keeps those pleasure sensors working. Yeah, if you're constantly seeing your P&L having things every day, yeah, money appearing constantly makes you happy. Yeah, so looking at the exposure from a lots sizing perspective is actually a better way to do it. So I'm heavily exposed on the US dollar long at the minute. So when I'm doing my drawdown control, my focal point is what can I use to reduce drawdown and make those positions better and focus on any US dollar pairs. Yeah, so this here is my focal point for drawdown control. That one, not worried about. That one, not that worried about. This one, yes. So it's basically the way that I do drawdown control is a little bit different, but it's not right or wrong. It's just different. Yeah. So if you did everything you do in the boot camp, which is what I did for years, it still works to this day. But there's ways and means of changing things that suit you better. And I prefer this view of the market, which is what I've been doing for a while. I just haven't had a visual tool to demonstrate it, which is what this is. But yeah, so that's where I need to focus my attention at the moment. But the heat mapping tool does that for you anyway. If you turn everything off, yeah, it's bloody obvious where you need to focus, isn't it? Especially on that. Yeah, that would be my second focus. So let's say today the US dollar spiked 200 ADR. That disappears. That disappears. All becomes no problem at all. So then my focus shifts onto the Swiss franc. So at the moment I do nothing. It's not a worry. But if it gets a little bit bigger, I will then start to think about doing drawdown control on the Swiss. Yeah. So the way that I do DD control has changed from the bootcamp. Apart from that, not a lot else. Strategy. You know, I give in the bootcamp three main strategies that I trade, which is H4, M15, mean reversion, H1, M5, and ADR reversal. That was my go-to bread and butter. Not so much anymore, because it's too slow to make money. I would rather get into more risk faster using lower lot sizing, so lower exposure on each individual symbol, but more of it faster, and bank quicker, than wait for these. These are always going to get you in the least drawdown but make you the least money. So this is the safest strategy, the medium strategy. This is the riskier strategy, but high returns, 25%, 30% in a month on a really accumulative month. And when the market is in balance across most instruments for a month, this thing will absolutely kill it. But in squeezes, you will be in at the beginning of the squeeze. Yeah, there is no strategy out there that is safe. There is no safe thing. If it was safe, you wouldn't do it, would you? If it was safe, it wouldn't make any money. So I've swung into more of what I'm doing now with the Zone Trader EA, which is position trading. It's all position trading. It's the same thing. It's why it's called the Position Trading Bootcamp. But there's no way to get in or out. I give examples of strategy. This is nothing. This is the wrong account. This is nothing to do with RSI, ADR, market reverse alerts, or anything. This is trading support resistance zones. I don't even teach this in the bootcamp, but it's not any different to the bootcamp. It's position trading. Position trading isn't a strategy. It's a methodology of trading. It's a way to enter and exit market on swings that banks and institutions use. It's not a strategy. It's a way of extracting cash. So I short it here. If that doesn't work, I short it here. If that doesn't work, I short it here, and I wait for the market to short. When the market shorts, I exit. Yeah. You could use an indicator. You could use price action. You can use support resistance. You can use a Bollinger Band. You can use somebody's signals. You can use your dog or your cat throwing up in a different corner of the room. You can use the tides. You can use the stars. You can use what you like to make a binary decision, because that is what trading is at the end of the day. And that has not changed. But and I've had quite a few people who have said in the past to me, you flick around all the time. How the hell are we meant to keep up? You're not meant to keep up. I'm flicking around because I see stuff and I like it and I take it. And this is the reason the Position Trader EA has got buttons on it. Because if you like the look of CAD Swiss long now, press the button. There's no signal, there's no strategy. The RSI is not extended. It's a reversal alert retest, yes, but you can take that. It hasn't come off of a decent support resistance level. It's come out of a propulsion gap, but it hasn't come down to here. It's going up. If you like it, press the button. What's going to happen? That or that? If it doesn't do that and it does that, press the button again down there, move your price and wait for it to do that. That hasn't changed. That's position trading. That's what I teach in the bootcamp. People are looking, though, when they do a course, for a set of rules that you have to follow to make money in the market. If that existed, nobody would make money in the market, because we'd all do the same thing. Therefore, you wouldn't have a difference of opinion. And when I wanted to buy something, no one would be selling it. That's the market, isn't it? Markets are a transaction between two opposing parties. One bank goes that way with 1 million. One bank goes that way with 1.5 million. Price ticks up. That's how trading happens. So all it is waiting for price to move up and down. And the Position Trading Bootcamp teaches you that. But you have to extrapolate on top of the methodology a way to enter. And that's what I do. But I don't do it the same way all the time. So, some of these strategies on here, I just don't trade them anymore. The trend pullback strategy, for example, I don't do that anymore at all. The new Position Trader EA doesn't even have a moving average filter. But you can also use this with the Position Trader EA, because you just stick a moving average filter on your chart, and basically you press the sell button if it's below or the buy button if it's above. You are the filter. So that's changed. The other big change, obviously, which was not covered at all in the bootcamp and still is not covered in the bootcamp, which won't be, is swaps. So when I did the position trading bootcamp, swaps were not a thing. So that's I would say the biggest change is swaps. So the fact that we use a swap filter now, which isn't showing on here for some reason, I'm gonna have to wait for it to tick. So yeah, so the swap filter is the key difference in the fact that I am only going to trade in line with swaps, but this has only come about in the last year, since I got stuck in the US dollar yen squeeze. And I realized how much money I spent on swaps, which is why the new dashboard has got all of that information about swaps on it, because it's absolutely critical knowing what you're paying in swaps now. Not so much on this account, but on my larger account, it's, paying 10, 20 grand in swaps in a quarter is like 2 holidays a year gone, because I traded in the wrong direction of the swap. Doesn't matter which direction I trade, does it? The market is going to go up and down. Yeah. So if I choose to pay $30 a night to hold a position, or I choose for them to pay me $10 to hold a position, I'm going to do that one. Or rather, it'd be that one in the end, wouldn't it? Because there's no point in paying costs in trading when you don't need to. The direction the price is going in is not driven by anything but bank and institutional order flow. If the bank and institutional order flow is in the wrong direction for me at the moment to trade in line with the swap, I just wait for it to get in the right direction and then I'll enter at a later date. But I want to go in the way the swaps, in the direction that the swaps are going. And that's really it. Why is my swap filter not appearing? Oh, there it is. No, it's there. Back now. So yeah, so the swap short is $30. The swap long is $9.55. So if I press the buy button now, and tomorrow I'll have, if I had a contract on, I'd be $9 better off. Yeah. If I press the short button now, tomorrow, I'll be $30 worse off. So if it's not right for me to press the buy button now because the market's pushing, fine. When it pushes down, then I'll buy it. And if it continues to push down, that's fine. I'll scale in. But that is a major difference, which is not covered. I kind of want to redo this totally. I want to redo the boot camp from scratch, but it's a massive job. It's a 12-hour course, which I created all the content for. I created everything for this from scratch, all the slides, the lot. And it's all some of it I can reuse, but some of it I can't. And some of it's just not relevant. So I'd probably have to take a week off just to prepare this to then redo it. And obviously it would take me somewhere in the region of 20, 30 hours to redo it. But a few members have asked me to do it live. So just go through the slides in the member streams and just deliver the whole thing from scratch as a new live kind of course, if you like. And I probably wouldn't want to do it in the member stream, to be honest. I probably want to do it so everyone can see it. I don't want to just, because it's not new. It's not a chargeable thing. It's something that's just, it's there for education. So, but it's not an easy thing to put together, unfortunately. It's a lot of work. And I don't have much time because I'm in here all the time trading and doing this. So, but anyway, that's what's changed. Maybe I missed your answer. Is there a setting to show the MRA rectangles? No. Yep, you missed the answer. It's right. It's somewhere else in the stream, FTNet. It will show them. It will show them if they're relevant. If they're not relevant, it won't show them. Yep. So it's got to be at the high of the day or the low of the day. It's in the manual. If you go and look at the manual, actually, do I cover it in the video? That's the wrong video. That's the wrong video. Sorry. I'll need to change that. I think it is in here. There we go. Oh no, I didn't cover it, did I? That's why I got asked. So no, I've already covered it in this stream somewhere further back. I've covered it. It only shows at the higher the day and the lower the day, and it only shows if the conditions in the indicator and the EA are met. So if the RSI is not extended, it won't show. If the ADR is not extreme, it won't show. Yeah, there's no point in me drawing a rectangle on a chart for no reason whatsoever if it's not going to use it. It will only use that if it is set to true and the condition is extreme. Yeah, so if you are trading ADR reversals, if you put it on this or this, it will show the reversal alert. If we're at high of day or lower day, no other case. Yeah, on RSI, there are no RSI extensions. It will not show. You can put it on every single chart at the moment. It won't show on anything because you're not going to take any trades. So why put an indicator on a chart to show you nothing? You're not going to use it, are you? So it doesn't show it. And if it's taken a trade and you've had a signal, the next candle, it removes it because there's no point in having that block on there anymore. It's happened. You're in it. Forget it. You don't need to know. You don't need to see anything. Everything that's happened in the past is irrelevant. Everything that's happening in the future is unknown. So it shows you what you need to show. It doesn't need, but again, you don't see anything, do you? The EA here, yeah, I never look at it. It's not a visual tool. EAs are not a visual tool. This is a automatic trading tool. It's not going to, you don't want to see anything. If you want to see stuff, get the indicator. Indicators are for visual manual trading. EAs are for completely automation. You don't need to see what's going on the chart. I almost didn't put the market reversal alert drawing on there at all, but I knew people would moan at me if I didn't. So, and it doesn't draw it the same. It's not the right color. It doesn't draw it the same way at all. It's not a rectangle that turns into a filled block. It's just bodged onto the chart because it doesn't matter. Not important. Do you only trade in the direction of the positive swaps? Yeah, I've covered that one. Plus side, the redone bootcamp would only be 1.5 hours max. Yep. This is the problem. This is why nobody makes money in this industry now, unless they're selling courses. Because attention spans, there's no way on God's earth someone is sitting there for 12 hours watching a course. Fine. Off you go. McDonald's are hiring, but you ain't going to be a trader. If you haven't got any time, you ain't going to do this. Yeah, this takes years of practice. My 12-hour course is not going to make you profitable overnight. It will stop you losing money, but it's not going to make you Lamborghini money in any way, shape or form, but it'll stop you losing money. And you'll hopefully, the idea behind the bootcamp really for most people, I think, is to open their eyes to what this thing is. Yeah, what trading is. What it isn't is that. Yeah. Unless you've got 500 grand sitting in the bank, you're not buying one of those with trading cash. And if you've got 500 grand sitting in the bank, go and buy one of those. Much better use of your money. That will appreciate in value. Your trading account is going to make it very difficult to appreciate in value. I know this is a tangential question. What is a tangential question? I don't even know what that is. And feel free to ignore. I might do. I'll answer it first. But where did you learn programming? I'm self-taught. Struggling to find a good source for MT5 learning. That's because there aren't any. MT5 is a ball ache. Basically, all you need to know is C+ and C#. That's it. So if you know C+, you don't know C#, learn C#. MT5 is a pain in the arse. everything I do for MT5 breaks. Everything I mean, it's not because I'm a bad programmer. It's just the complications of MT5 make it so difficult. It is a totally different language. The way that all drawing objects are handled, totally different. The way initializations happen, totally different. The way that orders are handled, totally different. Yeah. So you write something in MT4 to convert it into MT5. You start at line 1. Yeah. You can convert, I would say, probably 60 to 70% of MT4 code is exactly the same. But that 30 to 40% that's different is not just this ABC123 needs to change into an XYZ987. It needs to be completely changed from an ABC1234 into another widget that is totally different, that has nothing to do with the widget here. Yeah. So it's like saying, right, we're going to hammer into this wall because we can. Now we're going to hammer into this wall. Oh, no, we can't. We need to drill into it because the wall is totally different. The language is different in the way that it works with MT5 because MT5's graphical user interface is totally different because it's designed for futures, but nobody uses it for futures because there are NinjaTrader, CTrader, and a million other platforms out there, TradingView, which are a billion times better than MT5. So if you're using it for CFDs, scrap it and use MT4. Absolutely no reason to use MT5 at all. MT4 is stable, fast, uses multiple processors. It's brilliant. MT5 is slow, unstable, updated, buggy, visual interface is crap, and oh God, I'd go on forever. But it's just not as good. People think because it's got a 5 on it, it's better than a 4. It's not. It's totally different. The iPhone 16 is not better than the iPhone 15. Slightly different camera. Yeah. If you're a photographer, brilliant. If you're not a photographer, don't. It's just no point, is there? But anyway. That rant I've done probably 100 times in here. And I'll never stop doing it because it's terrible. It's not terrible. That's not the right thing to say. It isn't terrible. It's just not as good as MT4. But its backtesting is slightly better. This is the difficulty I have, is backtesting, because it's a slightly better backtesting engine. But again, it's a different backtesting engine. So there's pluses and minuses. It's not as good as data handling. MT4 is better, or MT4 plugins you can get are better. But it's got a calendar built in. Brilliant. I got one here. I don't need it. Yeah. So yeah, have C# experience MT4 made so much more sense. Yeah, it will do. It's like learning Japanese, MT5, honestly. You know, it is a very different beast, but anyway. Got some Euros CPIs just come in. We know those already, so they won't move. Right, so that's basically all I've got for you today. I'll be back tomorrow. I'll go and get this dashboard fixed this morning. I haven't got an instance. Oh, yes, I have this one. And actually this one I can use, can't I? No, that's already done. That one. Okay. So yeah, I need to test this dashboard because there's a bug with the weekly. If it's got an empty week for this week, it doesn't show any weeks, which is wrong. So I need to get that fixed. I'll get that fixed this morning and I'll roll out an update. I'll be back tomorrow for the member stream. Not sure what we're going to cover in the member stream tomorrow. I might just do a general session tomorrow on stuff, really. But I want to start working on the new version of Position Trader EA. Of the opening range breakout EA for MT5. So I was hoping to try and get some programming done for that so that we could start looking at that and looking at a portfolio approach to the opening range breakout strategy, but I haven't managed to get it done yet. So we might cover something different tomorrow morning. I'm not quite sure what yet. I'll see how today goes. But I'll be back tomorrow for the member stream, and then as usual back on Wednesday and I'll get that video changed. Back on Wednesday for the afternoon session at 2:30. We'll trade the Nasdaq Dow. And obviously we'll have a look at how the week's gone. But this week is very, very, very light for news. So movement this week, I suspect, will be very Trump related. So just bear that in mind. It might be one of those quiet ones. Not going to be scrapped anytime soon, in your opinion? No. Just so you know. So I've been asked this question lots of times about MT4. MT5 is not a replacement for MT4. MT5 was a side-by-side product for MetaQuotes because they did not have access to futures markets. So MT4 cannot access futures markets. MT5 can access futures markets. So this is the futures version of this. 80% of MetaQuotes revenue comes from that. 20% of its revenue comes from that. If they were to scrap that and ask everybody to move over to there, they are removing 80% of their revenue in the hope that everybody will go, oh, okay then. But that's not what will happen. What will happen is 50% of them will go, I'm going to move over to NinjaTrader. And they will lose their customer base. All of their revenue comes from the marketplace. Most of it. Yeah. And 80% of sales through the marketplace are on MT4 indicators and EAs, not MT5. So they can't scrap it because it is the leading product. It's just not for futures. And as for the futures boom has exploded, what does everybody in futures? If you go and look at any channel on YouTube for futures traders, have I got any in my list? Rafa, yeah, he trades on Top Step X / Tradeovate. TradingView, Bookmap, Jigsaw. There's just loads of people. None of them trade on MetaTrader. You won't find any futures traders trading MetaTrader. Yeah, they tried to compete. They needed a platform to compete with all these new platforms coming out for futures, but it's not as good by a mile. So nobody uses it. Brokers, CFD brokers, wanted to give an option, so they said, right, well, we'll buy your MT5 licenses as well, so we can offer MT4 or MT5 to our customers. But everyone went, thanks, and you get one and you use it, but that's not the majority. It's just not the way it's gone. I think the idea was to probably remove MetaTrader 4 at some point, but when you actually look at it financially, it's not viable. At the moment, but that might change in the future. And if it does, then I will become a sole MT5 coder, won't I? And MT4 will get dropped. But everything I do is on MT5 as well. Virtually everything that I create is available on both platforms. It's just not as good. It's not as fast. It's not as stable. You know, it's just, you know, if you think about it, right? And this is why I don't think it's taken off. As a trader, my sole focus is this VPS here is up and running 24/7, 365. I need it to be up and running 24/7, 365 and stable. Therefore, it has its own uninterruptible power supply. I have a backup internet connection, and I need it on the most stable platform going that does not get auto updated by MetaTrader, updates pushed out, restarted, and terminal shut down. I need it to be fast. I need it to be able to run 28 charts like that. Yeah, that's what I need as a trader. If I want something to look good, I'll use TradingView because it looks awesome. But a candlestick on TradingView and a candlestick on MetaTrader 4 look exactly the same. There's a body, there's a wick, there's a price. That is no different. And this is what makes me money, not the fact that I can change the color of it and give it a drop shadow. Couldn't give a fuck. Excuse the French, but I don't care. Doesn't make any difference to me. It doesn't make me money. What makes me money is the fact that I can backtest and robustness test strategies using automation very easily and quickly using data that I can select and verify to make sure that my backtests are accurate. That's what makes me money. Having a chart that looks good, I don't care. I need stability and I need speed, because at the end of the day, that's what this is about. There's all sorts of weird and wonderful things you can draw on your chart. None of them are going to predict future price movement. None of them. Yeah. Unless you've got a time machine, you don't know whether this is going up or down today. Right now it's going up. Where it's going to end, no one knows. Yeah, you buy it now and it suddenly go down to there, and everyone will go, why is it every time I buy it, it goes down? Think about it. That's all it does. Yeah, it's binary. Every time you press the button, there's a 50-50 shot of it going up or down. You press the button and the 50-50 was wrong. It's got nothing to do with the color of your chart, the candlestick, the indicator. It doesn't matter. What matters is price goes up and down, and your job is to extract money when the P&L has a plus in front of it. So therefore, the only tool you need is a dashboard that shows you where your pluses are. Close out the pluses and deal with the minuses. That's how you make money. You don't make it by having a chart that looks pretty or a language that's easy to code in. In fact, with MetaTrader 4, you do, because it is a hell of a lot easier. You may have saved me countless hours of relearning coding for MQL5. Yeah, you can get AI to do some of that for you, but I mean, AI, I've used AI to try and code stuff, and it's quite good at the mundane stuff, but context is where AI is lacking at the moment. And the ability to be able to provide large code snippets for it to be able to analyze. When you're trying to find that one semicolon that's missing in 38,000 lines of code because you forgot to save a revision and you can't go back, and it's something you've done today and you've forgotten what it was, that's where AI, I need it to go, you idiot, you forgot that. That's the bit it can't do. And that's what you come across 90% of the time when you're coding, isn't it? Like this weekly thing here, the weekly not showing if there is a 0 this week. Yeah, I know exactly what that is, but I know what that is. If I give AI I think it's 2,500 lines of code in this dashboard. If I give it those 2,500 lines of code and ask it to find that for me, it won't. You've got to have a human in there, and it's it's good for some stuff. It certainly can't build strategies. There's an article at the moment on MQL5 that they're running about neural networks and stuff. And I started to read through it yesterday. Developing a trading expert. No, it's not that. Not that. Reinforcement learning. No, it wasn't that either. I can't remember what it was now, but basically it's to do with these neural networks. You see occasionally on the MQL5 marketplace these neural network EAs, and they're meant to be very clever. But when you actually look at what the neural networks they're using are, it's all hard coded. If it's hard coded, how can it be artificial intelligence or some kind of neural network? Because the code is hard. What they've done is they've used something to backtest something to enhance the backtest results to make it more probable that it works in the future, but it doesn't change the strategy, which is hard coded. Yeah. So there's a lot of stuff that AI can do, but everybody that is selling anything to do with AI to do with trading at the moment, fuck it a mile. It's utter bull. Rubbish. Just doesn't work at the moment. And like I said, don't reteach yourself MQL5. Maybe teach yourself how to use AI effectively to convert code into MT5. That's the better use of time, in my opinion anyway. But better than that, just stick to MT4 and screw MT5. Unless they force you to use it, forget it. Right, I'll leave it there. Anything you need, let me know. I'll be in Discord. Back tomorrow for the member stream. Back on Wednesday for normal. And see how we go. Not a lot of news. So, yeah, good luck this week. I think it might be better watching some paint dry. All right, have a good one. Anything you need, let me know. Otherwise, I will see you next time.